Hedge fund Pershing Square founder Bill Ackman is a Trump supporter, made a post on X. He believes that Beijing is highly incentivized to strike a trade deal quickly. Prolonged tariffs risk companies losing faith in China's market viability. Without the deal, companies will relocate supply chains to India, Vietnam, Mexico, the US, or elsewhere. Holding out due to pride or emotion will worsen China's prolonged economic damage. He said, time is the friend of US and the enemy of China. So he's pretty much saying the longer the US is able to operate without China, the greater the risk that China will be permanently replaced, at least in some of the supply chain areas. For example, a rare earth export ban would eventually push US to find alternatives or boost domestic production. But the logic also works the other way around. Historically, US has been banning the high-tech export to China, for example, the ASML's chip-making machine. This actually pushed China to accelerate its own chip-making innovation. China has developed 5-nanometer chips without the help of ASML's latest technology. So the new NVIDIA GPU export ban may also similarly speed up Chinese GPU development. So overall, prolonged trade war drives both sides to adapt. It's unclear who will be the ultimate winner. Citadel founder Ken Griffin is a Trump critic. He said manufacturing jobs are not coming back to America. With 4% unemployment, he argues that the US can just move on with the current framework. He urges the US to focus on strengthening things like intellectual properties and content creation. Factory jobs, he noted, are rapidly automating and are paying a lot less. So I think Ken Griffin is overlooking the bigger picture, because Trump's stated goal is to bring manufacturing back to America, but that's a superficial thing. I think the real deal is likely to shift manufacturing away from China, because China's manufacturing dominance makes China a country with a large surplus, which means massive amount of US dollar is flowing into China every day. This helps China accumulate massive dollar reserves. With such big dollar reserve, China is able to advance in technologies like EV or semiconductor manufacturing, and it's able to expand global influence, doing a capital expenditure globally, such as the super mega infrastructure project like Belt and Road initiatives. So Trump's strategy is aiming to curb China's ability to generate surplus dollars and limit its global power. So the real goal of Trump's initiative is not to recreate low-tier manufacturing jobs in America. As the trade war goes on, we're seeing the count of container vessels sailing from China to US has tumbled. The total capacity went from 69 on April 3rd down to 46 on April 24th. So the tariff is hurting the Chinese export, and the American consumers will also feel the inflation from this very soon. Before the reciprocal tariff was taken into effect, we're seeing that the shipment had a surge because there has been a stockpiling of Chinese goods from the American companies. But after the tariff taken into effect, we're seeing the shipment drop drastically. According to Michigan Consumer Sentiment Index, for the month of April, the index fell to 52.2 from 57 a month ago. This is the fourth lowest data back to the late 1970s. And the 5 to 10-year inflation expectation has risen to 4.4%. It's the worst since 1991. So it's very interesting to note that mid-2022 is actually the worst CPI report. The American year-over-year CPI went up to 9% during that time. But at that time, the 5 to 10-year inflation expectation didn't surge. It was at 3%. So the consumer today, without seeing a ugly CPI report, is expecting a very bad inflationary picture in the next 5 to 10 years. It's worse than COVID. And this chart shows you the one-year inflation expectation. Right now, it's up to 6.5%. It's the highest since 1981. And there's also the interesting observation, right? In mid 2022, where CPI year over year went up to 9%. The expectation for 1 year inflation rose up to 5%. And now the CPI is down to 2.4%, and we have it at 6.5%, higher than the 2022 peak. So back in 2022, the inflation expectation was backward looking because people look at the crazy CPI report and they increase their inflation expectation, right? But nowadays it's forward looking. It's without the high CPI report, people are expecting high inflation solely based on the fear of future tariff policy and the fear of future inflation triggered by the tariff policy. Shein is a Chinese e-commerce company that sells the cheap fashion-related Chinese-made product to overseas. Shein has already started raising U.S. prices ahead of the new tariff. So for the platform, the beauty and health product has risen 5.1% in price on average. Kitchen product has risen 30%. Women's clothing has risen 8%. So the actual tariff that's going to apply for companies like Shein is the small item product. There used to be a de minimis exemption on small items less than $800. When they used to enter America, there's no tariff applied on them. That's how these Chinese e-commerce is able to sell at such a low price. So Trump signed an executive order on April 2nd, getting rid of this tax benefit or tax incentive for small items coming into America. So it's going to be effective on May 2nd. So the cheap packages imported from China and Hong Kong will be subject to 120% tariff. In the past few years, the Chinese e-commerce that operates on the cheap Chinese export goods has heavily relied on this exemption, this tariff exemption on small packages. So getting this removed will heavily hurt the e-commerce platform like Shein, Temu, and AliExpress. But at the same time, American consumers will be facing higher inflation. It's already happening right now. But it's also going to benefit other supply chains outside of China. Wall Street Journal reported that the Chinese authority will be quietly waiving the recent 125% tariff hikes on select U.S. imports. Affected goods are certain semiconductors, chip-making equipment, medical products, aviation parts, and some industrial chemicals such as quartz or ethane. So the carve-outs actually revealed China's economic vulnerability. It shows that some Chinese industries, especially in advanced tech, aerospace, and pharmaceuticals, they still depend on U.S. imports. But the same thing also happened to America. A few days ago, Trump erased some of the tariffs on certain Chinese electronics imports. But the difference is that the U.S. clearly announced its exemption. But China, on the other hand, will most likely handle this exemption quietly, most likely to save face. Unfortunately, sometimes this information gets leaked into the Western media. So beside the Chinese leaks, there is also White House leaks. An anonymous senior White House official leaked why Trump no longer wants to fire Powell. He said Trump dropped the idea after Treasury Secretary Bessent and Commerce Secretary Lutnick intervened. They warned Trump that firing Powell would cause major economic chaos and messy legal battles. Lutnick also argued it wouldn't change the interest rate policy, as other Fed board members share Powell's approach, meaning that the Federal Reserve actually vote on rate decisions, not just Powell. Right? There's 12 members in the Federal Open Market Committee. Just by removing Powell, it's not enough to totally influence Federal Reserve's independency. So I think it's good that Trump have people around him who can rein him in when he starts to have crazy thoughts or start saying crazy things.